This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
You find peace. You don't find peace. You choose it. By what you ignore, by what you release, by what you stop giving energy to. That's the shift.
Welcome back. That is the late, great Bruce Lee on how to find peace. We all should be striving for this. But I digress. We have a very boring market to cover today. CPI numbers came out as expected, but volume is lower than July 4th weekend leading up to it. It's 3:30, and the SPY has traded 22 million shares versus 52 million daily average. In the continuation from yesterday's share of Adam Taggart, Thoughtful Money's interview of Ed Zitron, Ed Zitron was on CNBC today, this morning. Do you notice people like Peter Schiff are no longer invited? The fact that Ed Zitron was invited on CNBC Squawk Box to poo-poo the AI trade should give you pause before you willy-nilly short AI. Because CNBC is used to position for Wall Street. So that was quite interesting. Right after Adam Taggart's interview, he goes to CNBC. I don't know when that was recorded, but I believe it was live this morning. But let's cover. So I'm going to do the usual market coverage, but I'm also going to update everyone on the two setups, the bullish setups that I shared recently and how they're doing. I also want to compare and contrast AppLovin. For longtime subscribers know I bought AppLovin at $30 using my methodology. I'm no genius. It's set up with my methodology and it was starting to break out and I bought it. So I'm going to look at that, where it is today. I'm no longer in AppLovin. Full disclosure. Not that it matters. It shouldn't matter, right? Like when you hear, oh, not your advisor is in this, or, Michael Green thinks that, or Ed Zitron thinks this, they're all just anecdotal. You should be like, oh, that's interesting. That may or may not jive with my own analysis, but that's interesting. That's all you should really think about it. But I'm also going to compare and contrast to Roku, which I also shorted a long time ago and made good bank on, but it's kind of bouncing hard right now. So I wanted to take a look at that as well. So let's cover some breadth figures and then we'll jump into those specifics. Markets are still open. This can change, but I doubt it'll change much. We had 155 new highs versus 112 new lows. 51% advanced versus 46% declined. 44% below the 50, 46% below the 200. There were only 10 profitable companies in the NASDAQ making new highs. And look at the number one gainer, Cheesecake Factory. We haven't seen it in a while, but I have linked their menu online. And because like when you have a restaurant chain that has X number of locations, you are kind of forced to publish the nutrition information. But like just their burgers are all over 1,200 to 1,000 calories. I didn't even go to their salads, but their salads are just as many calories and fat. And that is the number one gainer on the NASDAQ that are profitable companies. So that's interesting. Number 2 was another chain restaurant, Texas Roadhouse. I heard great things about Texas Roadhouse. I've never eaten there one day. Profitable companies in the NYSE making new highs. There were 21. The top 3. H&R Block, Tax Services, Brinker International, a healthcare company called Hymonetics, never heard of them, Tenet Healthcare, Darden Restaurants, Marathon Petroleum. That's what led for profitable companies. Industrials was the leading sector next to tech. Tech was up 1.5, mostly AI, but industrials beat tech. What else stood out? Before I go into what was strong in the S&P and NASDAQ that were not profitable, just included everything, let's jump into some of these charts for the setups.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.